Hi everyone, and thanks for checking out my channel. A few weeks I didn't check on WTI with having a closer look at it, so I'm gonna do some more detailed analysis today. Roughly trying to explain why I believe that the price at the moment around the $40 is roughly balanced, so I'm not expecting any more drop to come anytime soon. Still believe we're going to go down and we're going to visit potentially $37 or $35, but potentially not in the coming weeks. Something a little bit more stable around the $40. Will adjust my strategy in terms of how I'm gonna trade this, because the recent 2 weeks have been really not efficient in terms of swing trading, trying to capture high position short from there and holding it and basically getting all the profit wiped out by the bonds on the lower end of the range. So to do this, I'm going to look at the bullish arguments and then the bearish arguments, starting now with the bullish arguments. So the first one, I believe it's been really clear over the past few days. OPEC plus cohesion, they're actually acting together. Very uniform approach. They believe they are going to manage cuts, potentially delay the one on the production they planned for January, postpone this for later on. So that's definitely supporting the price, as traders will be hesitating to actually commit to large short position in that context should the OPEC plus decide to actually cut production a bit earlier, supporting the price and moving it higher. So very difficult to trade short against this. We need to watch out really closely for any weakness in that correction. It might actually happen should we have some stretch on some countries' budgets, revenue, that could actually start putting some pressure on that correction. But for now, I'm not expecting this to happen, at least not in the near term. We also having technically 39 as a solid support, as we can see here. We got mid-October some break lower that got bought back very quickly, huge candle from 37, so to reintegrate the range from 39 from 41.5 until then, and since then we are still moving inside that range, so definitely supporting the price. Also shorter term, we having 1 hour, 4 hours potential bullish divergence on the price action we had end of last week, so we can see here potentially it's not confirmed yet, so I'll wait on Monday to see what we get, but potentially we could see something similar to what we got before. The rising wedge got broken, but since we are moving into the range, we are potentially going back up and retest that trend line. So 42, it's probably a little bit of a stretch, would be pushing the price outside the range, so maybe would stop at 41.5, but that's the short-term trade I'm having in mind. Should we see some more reaction here, especially on the 1 hour, as that divergence is a little bit clearer there, we can still see a little bit of a push towards 39.6, 39.5. If we see some nice rejection at that point, entering long is definitely the trade I'm going to look at for next week. Now, also in support for WTI, the S&P 500 is potentially on the bridge of actually completing that cup and handle pattern. That is a continuation pattern. So I can draw the waterline is sitting just right here. I move this in red. So roughly 3,550. Should we actually see move to the upside from there inside the handle? We're having a potential move to the upside that could be significant on the break. We are now talking about a target about 3,900, which I believe is not something unrealistic for the coming weeks, just post-election. So we're having that limit on the upside that's running here. It's coming a little bit short, but roughly that would be the target, 3,800. Either it will happen or not, hard to tell, but the close on Friday is very promising for this. As we could see, we broke above that trend line, no momentum on the attempt to break lower, and 3,400 looks solid enough to build some basis for the move to continue next week ahead of the election in the US. So that will be supporting crude oil, I believe. And also looking at the quote report, we're having the managed money continuing to accumulate long position. They are now at above 400k, but they're adding 23k the previous week, and they reduced their short exposure as well. So it's definitely bullish. We can see the swap dealers are still standing at a really high net short position. It's almost 400k net short to cover for any potential move to the upside. So that's significant, and definitely supporting the support at least of that market, and no break lower. That's that one for the hedger. Now moving to the bearish side, that I believe are actually capping the price and preventing it to move above the 41.5. So first, we're still having a daily divergence that's uncleared. Usually these divergences they don't actually get invalidated, or very extremely rarely. So as we can see, we're still having during that move here, and when the wedge got broken, but that's a massive divergence we got here. There's a bit of room to move to the upside, but it's definitely limited, and it's pointing to a correction down to 34.6. So I'm still having that objective. We could get there, but the question is when, and we don't have the answer for this. So I believe that we're continuing the move inside that range for quite some time, and we might get some trigger that could actually get the price to go down and revisit lower end here at 34.6 to clear that divergence. So definitely that's bearish, and it will keep pressure when the price will move to the upside. So we got the rising wedge broken. I think it was last week, lower time frame. That did happen on the 21st. So yes, that was last week. We got broken here. Usually, as the objective for that kind of move, we take the basis of the wedge, the origin here. We report this here, so that could point to a correction to 37. So definitely not impossible. Should we break that range here? That's the next target. Are we achieving this in the coming weeks? Really don't really know. It's a possibility depending on what will happen there, and if we can actually break the 39 level, but definitely a possibility. We also having a major resistance I was mentioning at 41.5. That's capping all attempt to move higher, and I believe that will be still the case, and opening short at that level to cover down will definitely be the right thing to do. So 41.5, should we get there and have the right short signal, and if we can get close to the trend line on the RSI for the daily divergence, that would be a perfect entry point, at least to trade back to 39, potentially break lower to 37. Also on the quadruple, you can see some falling open interest, quite major, minus 50k, but that one's been a little bit misleading in the previous weeks. It was almost always the case during that move to the upside here. We have the dropping open interest, we still didn't see any move to the downside until we broke 42. So be cautious to take that one as being a major bearish argument against the move to the upside. Also, of course, fundamentally, we're having increasing supply, number of rigs in the US increasing, and Libya is actually putting production back online. Definitely that's bearish for oil and capping the price to move higher. We're also having Joe Biden that will have so anti-oil politics should he got elected. Of course, that can go both ways. So for the price, if it's acting to reduce the production in the US, of course that will have an impact. It's more bullish. If it's more on the side of the demand, that could actually have some impact, and we could see the price moving lower, but it's a little bit of both. A bit hard to tell if it's highly bullish or bearish. I would say it's a little bit of both for now, so we need to get some clarity on what that politic will be to make some more decision about what the next trend will be, and that's probably why that range will stay until the election, that's for sure, and potentially some weeks after the election until we get some more clarity about that politic. COVID-19 second wave, that one is a given. I think it's here. What's the impact? I don't know, it's hard to tell. The demand, of course, will suffer, but not massively. We are not going to see major lockdown. The vaccine is not too far away, and in any case, the uncertainty around the second wave is not comparable to the first wave. So we know the virus, the consequence and everything, and the country is not the full lockdown of the economy is probably not an option anymore. So I don't believe that's a massive argument, but definitely it will also keep the lead on the price to move higher, as this is definitely destruction on the demand side, and it will continue for the coming weeks and potentially months. So yeah, all in all, I'm still having a bearish bias longer term. I believe we are going to go down to 34.5, so that would be still my target, but later this year potentially, and until now we are going to continue to range more between 39 and 41.5, potentially reaching 42, potentially dropping to 37, but that would be the plan. So for me, trading next week, I'm gonna go for probably long position, long position, potentially on 39.6, but I wait here for that hourly divergence to confirm until I will open long on this. It's some sort of a bear flag, so careful, it can break lower. If that's the case, then it might be okay to take short position, but a bit risky in my opinion. So my preferred scenario here would be confirmation of that divergence here, entering short 39.6 to trade up to 41.5. Then I will reverse short position to basically trade the range on 41.5, potentially 42, and get up to the target back down to potentially 39.5. So nothing major, but still if we can actually book a couple of these trades in, that would make it up for the end of October. It didn't really perform well on oil. It was small profits, but because of that range trading and the strategy of trying to swing trade this, it's definitely not working on this, as you basically just give up all the profits when you get these bonds to the upside. So change of strategy, I think that will work better. So bullish a little bit short term, at least for the coming days, then of course bearish longer term, and yeah, I will check this again next week. I didn't do this last week for some technical reason, but I'll try to do this next week, and until then I wish you safe trading, and I speak to you soon. Cheers, bye.